What's up, Sherpa Network? Thank you for tuning in today. My name is Jonathan Tenenbaum, a.k.a. JT, a.k.a. Jay On, a.k.a. Sherpa Winfrey, and I'm the host and producer of DomainSherpa, where all roads lead to domains. Today's show is a Sherpa Short. That's where we usually take a topic or two, and we dive in kind of quick, kind of not. It's going to depend on how far down the rabbit hole we decide to go. Today's topic and today's special guest, we're going to start with the fourth quarter of 2024 domain investing index from escrow.com with the one and only Matt Barrie. And then we're going to see what else we get into. But real quick, let me go ahead and introduce the guest. Over to my right, I got my boy Andrew Rosener, a.k.a. Morpheus, a.k.a. the Dirk Diggler of digital assets, a.k.a. Bob Lee Swagger, the sniper, a.k.a. Drew, who got what I need, a.k.a. every Rosener has its thorn, a.k.a. never going to give Drew up, a.k.a. Graybeard, the domain pirate. What's up, dude? How are you?
I am. I'm great. I'm coming off a little holiday. That wasn't much of a holiday. You know, family time is not necessarily chill time, but I had some family coming to visit. It was a great time. Now I am getting back in the saddle, trying to play catch up, and finish off Q1 strong. That's it.
All right. I dig it, man. I dig it.
Laser focused.
All right. Well, we have a very, very special guest for the first time on the show since I've been host. Maybe first time ever. I feel like Matt's
been on before.
No, nothing exists before I was the host.
That was a while ago.
As far as I'm concerned, it's like a BC type of deal. You know what I mean? But let's go ahead and introduce our special guest. Below me, we got the one and only Matt Barrie, a.k.a. Matt Barrie Manilow, a.k.a. Matt Barrie White, a.k.a. Matt Barrington Levy, a.k.a. Matt, the sweeter the berry, the sweeter the juice, a.k.a. freelancer Armstrong, the from Adelaide, Australia, renowned technology entrepreneur, CEO of freelancer.com, the parent company of escrow.com, led Freelancer to a public listing in 2013, reaching a market cap over 1 billion. That's with a B, multiple Webby Awards, degrees from the University of Sydney, Stanford, Macquarie. I mean, adjunct associate professor at Sydney, teaching cryptography, tech ventures, frequent speaker at events like South by Southwest, recognized with awards like BRW Entrepreneur of the Year and E&Y Technology Entrepreneur, driving innovation in the digital economy. That came right from Grok, by the way, just so you know. Grok is giving you a lot of props and a lot of shout outs. The one and only Matt Barrie, welcome to the show, man. How are you?
Thanks for having me.
All right, man. Well, it's good to have you, and we appreciate it. And so
the only cryptographer I know that doesn't like Bitcoin.
Hey, that's a whole. That's a whole.
There you go. That's an 8-hour podcast.
Is that what we're doing? Because
let's check in.
No, I'm just throwing it out there. Yeah. You know what I mean? You got to just.
I get. It's one of the many things I get shit for on Twitter. You know,
it's like wearing down glass in the ocean. You know what I mean? Just slow, one wave at a time.
What we're trying to do is we're trying to slowly establish the things that we need in the industry in order to really take it to the next level. You know, domains are basically commercial real estate for the internet, right?
Yep.
And there's a huge, arbitrage between physical. I've said this many times, between physical commercial real estate and internet real estate, right? You go to Trump Tower, you lease a store downstairs for Tiffany's, and I think that costs something like $7 million a year. Or you could buy diamonds.com.
20 is the Fifth Avenue. Fifth Avenue,
20 million. Or you could buy diamonds.com, right?
Yeah.
Or gold.com or something like that, right? And there's a big arbitrage. So there's going to be a strong appreciation. I mean, if you want to buy a large commercial office building in any major city in the world, I mean, you're going to be paying huge amounts of money, way above what you would pay for a premium domain, which would deliver you a worldwide audience with infinite potential foot traffic, right? So what are the things that need to exist, in the industry in order to really take it from a level which at the moment is kind of transitioning from, I don't know, initially it was, technology enthusiasts would register a few domains, then it kind of with hobbyists, now professional players have come in, like Media Options and so forth, who are, in the business of broking and so forth. And the next phase is going to see things like, domain financing. It's going to see the equivalent of like real estate investment trusts. It's going to see
institutionalization
of the industry, and that's where it's really going to light up and take fire. And so one of the things you need to do for that is you've got to establish some sort of benchmark by how do you value these things, right? And with escrow, we've been operating since 1999. We're licensed everywhere. We've got a lot of volume that's gone through us, and we think we're the preeminent place for reporting that data. So what we're trying to do with this is, and we've been publishing this report for many years now. I think since 2015. I think the data goes back to from memory.
Yeah, more than 2020. I think it's
2020. I think was the first report came out. But also in that inaugural report, we did a very thorough analysis of stocks versus bonds versus real estate, over time, way back. And what we're trying to do this is really establish, if I go to just a standard institutional financier that knows nothing about, domains, knows nothing about the internet, even, like, what is the basis by which they can get an idea of how you value these things, right? Because there's the bastion of being able to determine things like, what should the loan to value ratio be with, when I do provide financing, if I have a default, how fast can I liquidate, how long will that take? What will be the recovery given default, and the loss given default, et cetera, and so forth. So really, it's just trying to establish a credible benchmark over time that has data in there that obviously is anonymized, because you do have volatility in the space and marquee transactions and so forth. But trying to get that out there so we can start building these institutions and really taking this to the prime time, because the domain space has come a long way. Registered domain back in 1996. I've got a domain I registered in 1996. I pay whatever. I got an offer for $5 million US for it just recently. That's a pretty long ride, but this is going to go even further. This is going to go to levels that I think the industry hasn't even thought of yet. And I think also, particularly in the world of AI, domains become even more important, because how are you going to instruct the AI to go to a destination and route? The most compact way of doing it is actually through a domain name. Go take me to Coca-Cola.
Not only that, so I don't want to interrupt your flow, but not only is it semantically more meaningful to verbally say a domain name which is spelled correctly and is inherently understood, as opposed to some creative brand name, but also, as we discussed a few shows ago, and I think you got overlooked, but I think it's a very important point. In a world of AI where software development is basically automated, where basically everything is either supplemented or automated, really the only thing that makes you stand out from anybody else, the only thing that can create a moat or prevent competition or make you stand out from your competition is your brand. And in a digital realm, your domain name is your brand. If your brand does not match your domain name, your brand is diluted, handicapped, a whole bunch of different things. So, in the world of AI, I am extra bullish domains.
Exactly. And so that's what we're trying to do with this report. So, and it's one of the many things, and we can talk about it later about some of the other things we're trying to do to kind of lay the groundwork with the infrastructure for that, I think, next level up of the space. So I mean, maybe what we should do is like skip through the report and kind of bring out some of the highlights. I don't know if you're going to flick any of the slides up or anything like that in the screen. Potentially we could do that, but the fourth quarter we saw about 92 million in domain transactions. That was up about 16.5% on the year before. Is a little bit down on Q4, but obviously if you have some higher value transactions in there, things kind of bounce around a little bit because there is a little bit of volatility. But you can pretty much see if you get a copy of the report, and they'll be available on our website. I presume you're going to put it on DomainSherpa and so forth.
Yep.
There's been a gentle trend up in terms of volume since, say, 2022, which is what we're reporting in this report. But we obviously had some pretty spiky performance in 2021 in the world of zero interest rates and the whole crypto.
I think if you took it back to, let's say, 18, okay, as a pretty good starting point, because prior to that, you had some very weird years with 14, 15, 16 was very strange. But if you went back to 18, I think you would see that same nice, gentle rise. Obviously, like you said, 2020 maybe, had a pivot down. 2021, zero interest rates and money everywhere. It blew, blow off top. But I think if you remove the outliers, you're right. It's just a nice, steady, gradual increase.
Exactly. And that's kind of what you want in a space.
Absolutely.
Right? You in a market, you don't want like this whole NFT up, down, left, right, sideways sort of thing. You kind of want that just gentle, gradual appreciation, because that's the foundation of a sustainable, interesting asset class. As from investors' perspective.
Yep.
So we've seen.
I think really the only I would say there's two critiques I would make of the categorization. One is you guys combine 2-letter and 3-letter.coms, and I understand from a commoditized standpoint, these are the most liquid domain names. You know, they regularly trade hands among investors. It's more easy to track, but you know, it's basically an order of magnitude difference in valuation between a 2-letter and a 3-letter, even at a wholesale level. And so, or in particular at a wholesale level, it's even 2 orders of magnitude difference. So I think that 2 letters should really be isolated. I think that's a very important asset class within domain name sub-asset class. And I know there's not a ton of them that trade, and so that's probably the reason you combine them with the 3 letters is to further anonymize the data. But you know, I think if you're just talking about average sale price, even if there was one domain that traded, people don't know that as long as you don't talk about volume. But I would like to see, because for me in particular,
the issue with two-letter domains is only what 26 squared number of domains out there.
676. Yeah,
exactly. So you everyone can track that and see if something changes registration in the quarter, and it kind of gets. I mean, because I'm looking at the data now. I mean, like the valuation of that category combined jumps between 60K in a quarter or what, roughly, and 2.5 million. So
yeah,
you know, even how we've got it here, I think is a little bit, a little bit not happy. So
well, I hear you, but there is a huge number of better.coms that generally trade in a quarter, and some of those are wholesale, some of those are end users, and so there's a very big discrepancy between pricing. So I guess what I'm just trying to say is, like, that combined category of 2-letter.coms and 3-letter.coms, it doesn't give you much signal because there's too much noise. Another thing that could be added, this is not a critique of existing data, but you love macroeconomics even more than I do, and are better versed in it than I am, but I do love me some macroeconomics. And so, I look at sort of what's happening in the United States and the new administration. I look at, where are we going from here, economically, from a global perspective. And I think, certain emerging markets are going to be very interesting, and others are going to take a beating. And I think that foreign language domain names could be a very, I don't know how easy it is for you to track that without manually sort of tagging each name, but it would be interesting to see foreign language.
Actually, it's a bit like password cracking. Yeah, there's all these different word lists that people use for password cracking.
Yeah,
I guess we can just figure out what run John the Ripper against the
exactly.
That's actually some good feedback, and
I'm interested in that because what we're seeing is a modest increase in demand and in sales of foreign language domain names, and also an increase in CCTLD domain sales. Although, to be clear, because you'll have these people who are, .ai for the win, right? It's not .ai or it's literally people that want a local presence in a local market.
Yeah.
.de, .co.uk, .be, whatever, AR for Argentina.
Yeah,
people want local presence more and more and more. And I think that based on the macroeconomic outlook that I have, I think that is a trend that will increase. That yes, people want their big global brand, but more and more, they're also going to need a local presence, particularly in a world where tariffs become ubiquitous. That's also accounting for the fact that most of the transactions, like I'm looking at page 4, total transaction value by region, right? And China is, I would, in my opinion or assessment, highly underrepresented here because of capital controls, et cetera. And so you've got a lot of local providers of escrow and transaction processing locally in China and in Hong Kong. And so if China and let's just say Asia more broadly were more represented here, if there weren't those capital controls, you would probably even have a higher portion of the market share, but that's pretty impressive because that includes, auctions, expired auctions. That includes marketplaces. I think we estimate roughly 1.5 billion a year in the domain aftermarket. Again, aftermarket, and yeah, you guys are doing about a third of that, at least.
And we also now have a checkout solution, which we're making even slicker because we're actually going into Shopify. So we've got we're actually in beta right now. In fact, if there are any domain participants out there who would like to build a Shopify shop and use escrow, you'll be able to do that. Just send us an email and we'll hook you up with the beta program for that. But
what would the fees be on that?
It's basically the same. So back to the report probably. You wanted to talk about AI.
Yeah, I mean, I see AI prices, in line with my thesis, in line with the preaching I've been doing on here, which is, not to be against .ai. I don't care.
Yep.
.ai is not a person. I don't, I have, great respect for .ai. If that's your prerogative.
.ai is not a person.
My agenda is twofold. One is I'm a broker, and so I want to go where the money is. And I try to be as clear about where the money is as possible. And two is as an educator on this podcast. And that's to try and, not protect, I'm not your mother, but to just educate you to make informed decisions. And I worry about new investors coming in and seeing, some of the old time investors paying crazy prices as an investor to buy a .ai domain name. A year and a half ago, it was very frothy. You had people in the domain investment community paying six figures to buy a .ai domain name. And I look at that and I think, well, who is your end user that's going to pay you $1 million plus? Now, could 2 or 5 .ai domains sell for 7 figures? Sure, no problem. But you can't make that a business. That's an exception, not a rule. And I say this all the time. You cannot build a business on exceptions. You can build businesses on rules. And so you can have a windfall from an exception. You cannot build a business that is sustainable on exceptions. And so, I think that this is to be expected. .ai will slowly cool off as companies mature. They move to their .com. I've given my thesis. I won't, regurgitate the whole thing for you here. But I guess what I'm trying to say is it seems to me that the data reflects that trend. Is that your interpretation?
Well, I mean, exactly. I mean, it's what is it, Anguilla? So it's a in the Caribbean is kind of where the country domain, and look, it's a nice little street. The volume has been lifting quite rapidly, but it's still Mickey Mouse, right? Like, so we got to 2.5 million of volume in the third quarter, and that was only 1 million in the fourth quarter, right? So it's been ramping, the volume, but it's still the small end of town. And it's a little fashionable little street, but it's possibly going to be like having a .internet or .computer domain very
exactly
soon, as
this is what I said.
AI.
Google doesn't need search.com. Google doesn't need to be google.search because it's redundant. And in a world where AI becomes ubiquitous, .ai becomes redundant, except for maybe a handful of dedicated AI B2B tool players who it makes sense to be .ai because they don't do anything except produce AI technology that is sold to other businesses that then create a consumer-facing product.
Look, I'll give you a very simple example. I mean, like I bought freelancer.com and I bought that in 2010, or I think it was about 2009, 2010. And I paid a huge amount of money for that domain back then. I think it was one of the top 5 sales in the year from memory. But I was getafreelancer.com before that with my main business. So, and I thought at the time, Get a Freelancer, it explains what it is. I go into a room, what do you do? I'm Matt from Get a Freelancer. It's obvious you get a freelancer, right? And then, it suggested to me, why don't you get freelancer.com? And you had Microsoft's computer game freelancer, you had freelance journalists. What did freelancer mean? And for many years, I bought, I'd go into a room and I'd have Matt Barrie freelancer, and it's like, oh, well, who do you freelance for, right? And when I was Get a Freelancer, it'd be obvious what have you. But it became immediately apparent to me the second I bought freelancer.com, and because what happened was the guy gave me $1.5 million to go buy get a freelancer, and I bought that and fixed it up, and off I went. But the second I bought it and rebranded it, originally I was a bit unsure. It's like, it's a brand new brand. I'm building a brand on this brand new name. I go into the room. I'm Matt from Freelancer. Okay, what is that? And I have to explain it all. And there's whatever. But the second I did it, all of a sudden the recall, from journalists when they go, oh yeah, there's this new gig economy, and the companies are eDesk, whatever. And Freelancer. I'd always remember Freelancer.
Exactly.
Or someone meets someone on the street, say, hey, did you know you could go get someone online in Bangladesh to build your website for $50? Oh, yeah. What was that called again? I can't remember what it's called. Google Freelancer. Oh, boom, freelancer.com. It's like if I had freelancer.ai and I'm trying to compete against freelancer.com, all that's going to happen is you're going to give me overflow traffic.
Yep.
Right. People are going to type freelancer.com in, and I'll just get your traffic.
It's just brand dilution.
Right. I mean, that's what's going to happen. Right. Like someone trying to build a company on freelancer.ai right now, competing against us, all they're going to do is every time they spend a marketing dollar, I'm going to get, I don't know, 20% of that marketing dollar just for free. Right.
By the way, 20% is actually the right number. Microsoft did a study, and that's what they demonstrated. They demonstrated that on average, it's about 20% of spillover of traffic.
Well, and also what I think is the second I got freelancer.com, I got a permanent, I think, 30% reduction in my marketing spend forever. And it may even be higher than that, right? I mean, when you get the premium brand, especially the canonical name for the search terms for your industry, like freelancer.com, escrow.com, I think that is a permanent discount on your future cash flows paid out to marketing forever. And
for a whole bunch of reasons.
Recall from
increase your click-through rate, increase trust, increase conversion.
Everything. I honestly think it's the best money I've ever spent.
So talk to me about hyphen domains. Do you guys really transact a lot of hyphen domains? Like, how are these with content, or who's paying seven figures for a hyphen domain?
I'm pretty sure that one would have had content on it. It would have been an established business with content. I'd have to go look, to be honest, on that one. I'm not sure what that one was, but I'm pretty sure that would. Oh yeah, I see the spike in 2021.
And then again, I mean, look, you're over 2 million in 2020.
Yeah, they would have to be established businesses.
Okay.
Yeah, they're not.
But even so when I say, when I'm reading this, domains containing a hyphen increased in value to 113,000 in fourth quarter 24, from 71,000 in the previous quarter. Is that total volume, or is that average price?
That's total transaction value.
Okay.
Yeah, it's de minimis, and it's extremely volatile, and I don't know why we report it, to be honest. And it includes established businesses with content on it, so that's probably something that's probably not so relevant.
Well, it's funny. It's funny to me because we're in the middle of a transaction on a hyphen domain. It is a pure hyphen domain. I advise my client extremely clearly not to do this, to buy this domain, but they are adamant that they want to buy this domain, and it is a hyphen domain that they are going to pay 7 figures for it. I'll be putting it into SO probably this week. Actually, almost definitely this week, maybe even today.
Is it like Coca-Cola or something?
No. It's not even a brand. That's the best part. It's not even a brand. It is a generic. This is a pure generic domain name.
Pure uncut hyphen.
With a hyphen. and it's about to sell for 7 figures. And, it kind of broke my brain because I was advising the client, look, I don't think that you should do this. I don't think that it's a wise decision. I think it's poor allocation of capital. They even could get one without the hyphen for cheaper. And no, they're not German. It's a .com.
Can you end a domain name on a hyphen?
No, cannot start it or end it with a hyphen.
Right. Okay.
That would be cool though. If you could end it with a hyphen,
or something.
Yeah, exactly. But you can't. ICANN doesn't allow it to start with or end with a hyphen. But you can have up to 24 hyphens in the middle. You can have 24 hyphens.
Oh yeah, I've seen a few of those transacts. Don't remember.
My new brand is gonna be 24. It's gonna just be called 24 hyphens. Because we deal with this some where people are, when we are using escrow .com for our transactions, and the question comes up, well, why not? Can I just use a lawyer? Or, Matt, do you mind talking through that a little bit? I do think that that's an interesting sort of discussion for us to have for a minute, which is, why to use an escrow service like escrow.com versus just having a lawyer handle the transaction.
We use escrow to protect the downside on a transaction, right? To make sure it doesn't screw up. Otherwise, just use
insurance.
PayPal. If everything's fine, just PayPal the money, right? Whatever, right? I mean, what people, we sometimes when people come in and try and niggle pricing or whatever, they go, I could just use a lawyer and do this, that, the other. And I asked my lawyer, and they said they'll do it. And like, sure, but there's a few things, right? I mean, lawyers just do this as a side service, not as a core business, right? So they'll do whatever you instruct them, but people don't realize that lawyers represent only one party in the transaction. They don't represent the whole transaction as a whole. They'll represent the buyer, or they'll represent the seller, right?
By law,
that's
they
how
cannot represent all parties.
So which party is the lawyer going to represent? Is it going to represent the seller, or is it going to represent the buyer?
Can I pause you for 1 second? Because I think this is a really important point that gets overlooked constantly when I hear people having this conversation. The law as it is, and I'm not a lawyer, I don't play one on the internet, but as I understand it, the law is that a lawyer has the ability to act as an escrow agent for a transaction, given that one of those parties is an existing client, not a new client, but an existing client. So if there's an existing relationship, then they can provide escrow services to this transaction and the third party. But it should be clear to you that they represent one of the parties' interests and not the other.
That's right. And
this is not a third party escrow service in that case. It is not a third party escrow service. It is a biased party whose interest lies with one of the other parties.
Yeah, and I'm also pretty sure they're not actually an escrow agent in the way that the legislation refers to escrow agents, but they can provide services to set up a escrow account with a bank, and so forth for one of the parties, provide their existing client and they're in the jurisdiction for which the lawyer is licensed, right? So, and it's unlikely the lawyer is going to be licensed in multiple jurisdictions, and so they're unlikely to be licensed in the jurisdiction of one of the parties. Markets from time to time where some stock will suddenly just tilt because someone's put a fat finger in it. It's like, so you got to think of, so you don't pay us because everything's going to go great.
I have suffered some fat finger losses
to make sure it does not, to hedge the transaction, to make sure it just goes through, right? And so forth. So that's kind of why we use us. And we're licensed, and we've got 25 years of history, and we are audited by every regulator 2 years on average per audit. So we're perpetually in multi-state audits. So we perpetually have regulators just going through all the accounts and what have you. And we're bonded in many jurisdictions. So we're required to have multi-million-dollar consumer protection bonds, which have never been hit in the 25 years of operating the business. But they actually sit there, and we pay for those bonds. So if something does happen, there's money, right? And so forth. And we are truly neutral in transactions. So when the transaction, we don't represent the buyer or the seller or the broker. We are just neutral. And our fee is fixed. You pay our fee, and that's it, right? So it may be a little bit more than other methods, but we basically, in a way, are selling. We're kind of in a way buying volatility off you. Right.
Yeah. Well, and I think there's something to be said too. Look, as you guys continue to improve the actual functionality and feature set, that you can go onto a control panel and look and see the status of a transaction, and you're not dealing with somebody who you've got to call and say, hey, or send an email, what's the status here, or for something that they don't handle all the time. There is no control panel. Things like that. I mean, there's value in all of that, and I think that's good. Again, this was a bit of a conversation we started to have offline, and said, let's just save it for the show. And I think it's good. I think it's good.
Yeah, speed of transaction, security of transaction. I mean, lawyers tend to stuff things up and take 10 times longer. I mean, I'm doing something with a law firm right now, and let me tell you, they told me, we can get this done as fast as your board can sign a resolution. We signed the resolution 3 months ago. We're still waiting for them to kind of get the act together on a bunch of filings.
As a lawyer, I don't know that this feels like we're beating up the lawyers a little bit, but
rightfully so.
Pretty justified.
So I was, it was a bit of a segue before to financing, and I just want to talk a little bit about that. D&H, yeah. So we've been doing vendor financing for a long time, and I know, Drew, you're very familiar with our services. We've actually now done, I've got the numbers here somewhere. We have done $670 million now of D&H vendor financing transactions. So that's quite a lot. Yeah,
670. Wow,
670 million.
I didn't realize it had scaled to that level.
Yep. And it's about 3,000 transactions, a little bit under 3,000 transactions.
What's your average transaction size? More or less?
I can do the math. I can just do the math on that, really. It's 670 divided by any.
Oh, so it's about 20 grand.
$230,000.
Oh, I was off with a zero.
Yeah, about $230,000 for that.
Okay.
And so we've got a long history of that. And what we're trying to do is we're trying to parlay that long history in vendor financing and to try and get up a financing option. And I mentioned before how I bought a few domains over time to kind of lock down canonical names for certain industry segments I might want to launch a business in. So I bought funding.com many years ago. So we're launching under under funding.com, which I think is the name to offer funding, pretty much.
Of course.
Finance, maybe. Finance, funding.com. That's pretty much it. I think this will lift the volume of the domain industry by multiples. Because in any asset class, when you bring financing into that industry, two things kind of happen. One is you just open up the liquidity and the volume of transactions because it becomes easier for things to transact because there's financing available. And the second is that you also get further appreciation in the asset prices in that space.
Look, when you decentralize risk, you get more risk. Risk equals price. So if we allow a little bit of decentralization of risk, meaning, okay, a startup comes in, they want to buy the domain, they want to put a deposit that's meaningful, that covers basically the default risk to the lender, then, they can afford to pay. Maybe it's double, maybe it's 3x.
Well,
my guess, what I've been preaching, I've been saying this for 20 years. From the minute I came into this industry and identified that domain names were commercial real estate, it made perfect sense to me that the evolution of this business required several steps. One is we needed a valuation model. Two, we need insurance. Three, we need credit. And the moment you do that, I think it's probably a 4x increase in the market cap of the domain industry.
Absolutely. Absolutely. But I think it's a very attractive industry. I think it is. I can feel it that it's probably on the verge of getting to the point where it's going to become institutionalized. And then you're going to see all sorts of things. You'll see the real estate investment trusts. You'll see all the things you see in the commercial real estate market happen. And people go, gee, that was obvious, and the money flood in, right? So, what did we think? What did we think of that before? It's like, well, we've been telling you for a few years, but it always takes a precedent, right? You got to get, it takes a bit of a precedent, and it goes 1, 10, 1,000, right? Like,
100%.
So, yeah.
Yep. It's slow and then everything all at once, and institutionalization. Yeah, and institutionalization is.
I mean, you've seen it with crypto, right? Like they just saw it, with institutionalization of crypto. Now, I have my problems with crypto in that the merchant adoption is kind of not really there, but we can argue about that in a different podcast. But if you look at
says the guy who loves gold. Go pay for your shirt at Walmart.
Why should you like gold miners? I like gold miners because they're leveraged.
They produce income,
and they're easy to model, and you got cash flows and what have you, right? So and they're geared to the price, right? But yeah, you see with the institutional adoption of things that kind of no, and then it just floods in, right? So I think this is the next big thing.
Remember that conversation. The reason I got so excited is because I'm looking at this and I'm thinking to myself, these are domain names. That's all these things are, except they don't have any real utility. And so to me, that is what the future of domain trading looks like, is real-time market pricing, where there is leverage.
Imagine a domain name with utility.
That's it. That's what I'm saying.
Yeah.
If people are trading these NFT JPEGs, with such immense volumes that far surpass domain names, and domain names are literally the original NFT. and domain names have immense utility, as we've just described throughout this podcast. There's no reason to me other than EPP system, which is basically what's holding back domain names. But there are some workarounds. There are some interesting marketplaces, I think, developing around this, and I think that idea still holds true. We haven't gotten there yet.
Well, I think it's coming.
Yeah, agreed.
And I think it'll be big money. I think you'll see big money in this space. I think this is going to be commercial real estate is what a $1 trillion market. Right? Like this is going to be big money.
Makes sense. It's literally the foundation on which the entire global digital economy sits. And you know what I know for sure is that the digital economy is up and to the right, and the brick and mortar economy is down and to the left. Yep.
We shall see. All right. Well, look, we've covered a lot of ground today, but all good stuff. And most importantly, as we led off, we've got the domain index, investment index from escrow.com, Q4 2024, available out now as of the time the show is released. So for those of you out there that are following the data, that's where you can get it, take it where you can get it, because the industry can be opaque at times. And huge shout out to Matt and the team at Escrow for putting out this information on a recurring, regular basis. Excited to see the continued evolution, some standardization, and as he said at the outset, he's not hard to find. Matt at escrow.com, and let him know the good, the bad, the ugly. And it's all good. And same thing here. We're not hard to find. So I guess just on the wrap, I'm going to say thank you to Drew, thank you to Matt for taking the time. It's always appreciated. We're also available, not hard to find, for the good, the bad, the ugly as well. Anybody that doesn't like what they heard on today's show can ask for a refund for what they paid to watch or listen, and we'll happily get that right to you. And through the new escrow.com payment gateway. And but. But jokes aside,
you can reach me anytime by email. I'm Matt_Barrie, BWIE on Twitter or X. Keep saying Twitter, but anytime reach out, and happy to have a chat.
Well, I love it. And but yeah, thank you guys, much appreciated. There's a lot of great stuff in this episode. And to the audience, thank you guys so much. Jokes aside, thank you so much for tuning in. Say it on every show. Without you, there is no us. Drew, you have any final thoughts? Anything last words?
Nope. I'm super excited and bullish about the remainder of 2025 and beyond for domains. I think we have a lot of green pasture in front of us.
Yep. Yeah, excited. Blue skies, and all that good stuff. Matt, any last final thoughts? I know you kind of put a lot out there.
Well, if anyone has any feature requests or ideas about services that escrow could provide to enhance the industry and take it to the next level, I'm always happy to receive it. So I'm just Matt, MATT at escrow.com, or Matt_Barrie on Twitter. Reach out to me, and I'm happy to have a chat.
That's where it's at, and the man is not hard to find. All right, well, everybody, thank you so much for tuning in, and we'll see everybody next time here on Domain Sherpa, where all roads lead to domains.